Okay, so tell us, the nature of conversation has also changed and about mid cap and small caps. There are a lot of stuff being discussed. Some say it is a very risky area, one should not be there, you have to get in and get out, all of that. Then the other side of the equation is that people say that the breadth of growth which India is witnessing, actually mid cap, small cap has to be some part of your portfolio and you have to play them via diversified basket over 5-10 years kind of a view. What are your thoughts on mid cap and small cap and the love for mid cap, small cap which the new investors had? Is it justified?
I think my thoughts are that there has to be a middle path, and the reason the problems and conversation has shifted in the direction it is that we have moved away from the middle path. Now, fundamentally, I do believe that if you look at mid caps and small caps, firstly, India has a very unique way to classify a company as mid cap and small cap. Ajay, it is a rank based definition. So mid cap is 100 to 250, and small cap is 250 and beyond. If you look at the average size of a mid cap in the country today, it is 35 to 40,000 crores. These are not mid-sized companies. In fact, in most segments outside of maybe banking, tech, and energy, if you want a market leader in any industry, it is in the mid-cap index. So fundamentally, do I believe that portfolios need to have mid and small cap to capture the breadth of the decadal India opportunity? Absolutely, because if you want a leader in capital goods or capital markets or diagnostics or China plus one or chemicals, these are all mid and small cap companies. I don't think a large cap portfolio in its sense is complete. So I believe that thesis. The problem is that people have forgotten asset allocation. I mean, if you look at portfolios today, they are skewed 70-80% mid cap. The other problem is, I was shooting yesterday on Shark Tank sets, and people who are clearly not very smart or not very aware of investing, if you ask them what they had invested in, their first investment was a small cap fund and only a small cap fund. Now, this to me is a little bit of a scary signal. So people are looking at last 1 year returns, people are looking at last 18-month returns and just buying mid and small cap funds. And the regulator is concerned, and they have a right to be concerned, because when this unwinds very badly. You've already started seeing that noise with just a minor 10% correction. To me, for an investor, the middle path is that you hold mid cap and small cap in some proportion, 20, 30, 40%. You hold it via flexi cap fund. You hold it via multi cap fund. And the one thing that this liquidity conversation, in my view, has done is nobody is saying go take, even though my fund house looks very good, go rank fund houses on liquidity parameters only and invest. Nobody is saying that. But what I'm saying is that don't just use return as the only metric to decide where you're going to invest. That to last 1 year return. Also think about liquidity. So it's also brought that to the center. It's moving us to the middle path.